We are living in very unusual times. The next couple of weeks will determine the fate of the American empire. And it might sound like I'm exaggerating, but if the United States will be dragged into this full-blown war in Middle East, it is going to have serious consequences on the entire American economy, and future generations will pay for this mistake. So instead of me simply exaggerating the crisis, if it sounds like that to you, let me show you the facts, let me show you the numbers, and you will be able to come to your own conclusions by the end of this video, because this might be the most important event that is happening in the 21st century, because the implications of this event are so huge that most people cannot even comprehend that. So let's get right into it. When everything started, Donald Trump made it clear United States has nothing to do with the war in Iraq. And that's where the good news actually stopped. Because if you look at the following tweets, United States is directly threatening the people of Iran to leave Tehran immediately. Will the United States nuke Tehran? That's why Donald Trump is urging people to leave the city, to leave the capital. If US will be using nukes on Iran, that is basically going to change the entire geopolitical situation of the world, and that could potentially put an end to the dollar as the global reserve currency. And it's very different from everything that has happened back in 1944 when the United States nuked Japan. Because back in the day, it was World War II, and both countries have been engaging in a war for years. And back in the days, nobody had any kind of nuclear weapons besides the United States. So it was the only country that showed to the world that nuclear weapons can have such a devastating impact. However, if you look at the following tweets, unconditional surrender. Otherwise, the war is going to continue. But why do presidents love wars? Because wars have the ability to skyrocket your approval ratings. It doesn't matter what's happening inside the country. If there is an outside enemy and you can get the entire country behind you against that outside enemy, your approval ratings are going to skyrocket. And Bush is a clear example of that. When September 11 happened, his approval ratings shot to 90%, one of the highest approval ratings in the history of the United States of any president. When he took the decision to invade Iraq, the same thing instantly happened. So one of the reasons that could push Donald Trump to take this decision is to increase the approval ratings. And that could be a reason that could help him to push his big, beautiful bill in the United States, especially with all the backlash that is getting. But what you need to understand is that wars are not cheap. There is a cost for any single war. If you're sending rockets, planes, jets, soldiers, you have to pay for all of that. Either you have extra money in the bank lying out there and you will start that war, which might be the most sensible thing to do. And if you do not have that money, which is the case most of the times for most of the governments, then you have to borrow that money. United States has a very long track record of waging wars across the globe. So we can simply look at those wars and ask ourselves a question. How much did previous wars cost the United States? Adjust them to inflation, and we will have a rough estimate of how much the war in Iran is going to cost the United States. Looking back at the Iraq war, it cost the government around $3 trillion. And this is the most moderate expectations or the estimates by the experts. But on one side, Iraq is a fraction of Iran. Iraq has half of the population of Iran. Iraq is not a mountainous country such as Iran. And Iran has like 90 million people. It has ballistic missiles. It has sophisticated technology. And invading it is going to be at least 3 times harder. But let's take the lowest estimate possible and assume that it is going to cost anything between $5 to $10 trillion. And this is probably the most realistic scenario. Once a war is started, a war is chaos. Nobody can predict what's going to happen next. Suddenly, everything could get out of control, and this number could go as high as $15 trillion, $20 trillion. And when you are in a war, you're not counting money. You're trying to win. When you win, then you're going to think about how to repay that debt. So you will simply continue borrowing trillions of dollars. The question is that, does the United States government right now has the money in its savings accounts, in its current accounts, wherever possible to pay for that debt? Once you look at the budget of the United States, suddenly you see a very clear problem. You're spending almost $7 trillion. These are the numbers for 2024. And the government is extracting from its revenue sources from taxes around $5 trillion, which leaves it with a deficit of almost $1.9 trillion. Now, this is the number for 2024. The deficit for 2025 is around $2.1 trillion, which makes the situation significantly worse. So we can be confident about the fact that the United States is not going to start the war with extra savings that it have kept for years, but rather the only way to finance this war is going to be through debt. There is no other way. If there is another option, please let me know in the comments below. How else will the government finance this war? So where are we getting the money from? Who is going to lend the money to the United States government to wage this war that is going to cost the government trillions of dollars? Basically, there are two options that the government can take right now. The first option, and this is probably the best option, is to raise the money from the public. The government is going to issue government bonds and will start selling them to everybody. So you, as an average American, can buy these government bonds. Investment banks can buy these government bonds. Other institutions can do the same thing. Foreign governments can buy these government bonds and invest in the United States. So anybody who wants to buy these government bonds and loan his money to the US government can do this. And this is the best way to raise money because it does not create massive inflation. You're simply borrowing the existing money within the economy and spending it. To a certain extent, it can cause inflation, but not massive inflation, since you're not creating new money. But when the national debt is around $37 trillion already, and the debt to GDP ratio at around 124%, loaning more money to the US government only creates unconfidence. Because investors would look at the US government, you're already having like $37 trillion. Your debt to GDP ratio is around 124%, and you want an extra $10 trillion to start this war. And when you're starting this war, it's not like the government will instantly raise $10 trillion to do that. They're going to do it slowly, step by step. Let's first raise $1 trillion. And then when the war expands, we realize that we need more money. And then we are going to raise another $2 trillion, then another $5 trillion. And then we have hundreds of thousands of dollars or billions of dollars would go to the veterans. And suddenly at the end of the road, you will find yourself that you have borrowed $10 trillion. So we don't know for a fact how much investors will continue trusting the government of the United States. Maybe there will be a period when the public is not willing to loan the government trillions of dollars. In that case, the US government has the second option to raise money. And that second option is much safer because when you're creating the government bonds, you can simply ask the Fed to buy those government bonds from the US government. And that's why they're loaning money to the government. But the question is that, where does the Fed get the money from? Exactly. The Fed is the only entity in the world that has the right to print those dollars. So when the government is borrowing money and selling its government bonds to the Federal Reserve, there is one thing that you should understand, that more money is being created. Yes, the actual papers, these green papers being created by the Fed, given to the government of the United States and being spent. And when the supply of money within the economy starts rising dramatically, inflation starts rising and the real value of the money starts going down dramatically. But that's also problematic because since 2020, the Fed has been trying to shrink its balance sheet. And that means that getting money out of the economy. If suddenly the Fed has to loan the government trillions of dollars, this is going to go back to the COVID level. An extra $10 trillion would be disastrous for the inflation. And that could be a reason for the Fed to start hiking the rates to control inflation. But here is the true cost of that war. It's not about the $10 trillion. If the government can borrow those $10 trillion, then it's not a problem at all. But because you are borrowing that money, you will have to start paying interest on that debt. For example, if you have a credit card debt of $10,000 and there is a 25% interest, the $10,000 is not a problem. But because there is a 25% interest, you have to make $2,500 in interest payments annually. That's where the problem is. And if it makes up a huge amount of your income, then you're absolutely in trouble. So we have to ask ourselves a question. What is going to be the interest rate on the money that the government is going to borrow? The yields right now, a 10-year treasury yields around 4.3%. Every $1 trillion that the government is going to borrow at that yield is going to cost it annually $43 billion in interest payments. Next year, the government will have to allocate $43 billion from the budget to pay for that $1 trillion that it has borrowed last year. But if the government will end up borrowing $10 trillion, then the annual payments will go to $430 billion annually. From now onward, starting from next year, $430 billion of the entire budget is going to go to the interest payments. And if you avoid those interest payments, suddenly you will have to default. This is the true cost of that debt. Do you realize the severity of this crisis? What a big chunk of the government's budget is going to go directly into paying off simply the interest on the national debt or on the debt that will be borrowed to start this war against Iran. So when you will be paying taxes, income tax, payroll tax, sales tax, those taxes are not going to go into improving the education in America or the infrastructure or the quality of roads, but rather they will simply go into the interest payments of the people who loan their money to the US government. But here is the real danger. What I have told you just now is just a part of the problem. It's not even the entire problem. It can get significantly worse than that if the US is going to take that route. The government is already having a huge debt. And if that debt keeps growing, there will be lower confidence by investors in the ability of the United States to pay off its debt. When you're loaning your money, when you're going to a bank to borrow a mortgage, the bank is going to do some checks behind you. It's going to check your background, see what kind of a job do you have, how much money do you make, and at the end of the day, they will come up with an interest rate or a mortgage rate for you. The better your credit score is, the lower your mortgage rate is going to be. But if you're an untrustable person, if the bank believes that the risks of defaulting is too high, then your mortgage rate is going to be significantly higher. The exact same logic applies when investors are loaning their money to the US government. And if the debt keeps rising, then the confidence of investors is going to drop, which means that they will start demanding a much higher interest rate on their debt. And that means higher interest payments. Currently, the 10-year treasury bills at around 4.3%. Imagine if they go to 5%, 6%, 7%. The second problem is that if that money is going to come from the Fed, then there is going to be a huge money supply that will increase inflation in the country, which will force the Federal Reserve to hike the interest rate, which will lead to higher interest payments. Both of these scenarios will force the government of the United States to allocate a much bigger chunk of its revenue or income into paying simply the interest on that debt. So let's assume hypothetically how much interest payments the government will have to make by the end of Trump's presidency if the actual war is going to take place. Now, Trump will be president until January 2029, so we will take it until the end of 2028. We simply have to take the current debt that the government has, which is $37 trillion, and then we have to add the annual deficit. Remember back in the beginning of the video I showed you about the $2 trillion deficit? So let's assume the deficit is going to be $2 trillion. Take $2 trillion, multiply it by 4, and that will be $8 trillion. And now let's add an additional $10 trillion that the government will borrow to start the war with Iran. And that will bring us with a total debt of $46 trillion in the best case scenario by the end of Trump presidency or by the end of 2028. And if interest payments by then are going to be around 5%, which right now they are 4.3%, then the annual interest payments are going to be $2.3 trillion of the entire budget. Currently, $1 trillion is being spent on interest payments. By the end of the presidency, it will be $2.3 trillion in the best case scenario, assuming that interest rates will be at around 5% or bond yields will be at around 5%. But if things escalate and investors start losing confidence in the US government, or the Fed will see that it's suitable to raise interest rates to stop that massive inflation that is coming out of the war in Iran, and they raise interest rate where the bond yields on average in the country is going to be around 7%, then the interest payments will rise to $3.2 trillion. Just to give you some perspective, that the government is making right now around $5 trillion. And imagine over $3 trillion of that simply being spent on the interest. But the more appropriate comparison will be is to see how much the government will be earning in 2028. So if the income in 2024 was around $5 trillion and the government's income annually rises by around 5%, the only way to increase that income is by raising taxes. And if the big beautiful bill is going to pass the Senate, then that deficit or that growth is going to be much slower. It's not going to be 5%. It's probably going to be like 2.5%. But let's assume the best case scenario. Let's say that it's going to grow by 5% annually. By 2028, the revenue is going to hit $6 trillion. But when $2.3 trillion, or in the worst case scenario, $3.2 trillion is going to be spent in interest payments alone, that means that half of the government's revenue will now go directly into paying off the interest just because of this war. Do you see the catastrophe of this problem? Do you see why investors can suddenly lose confidence in the US government? Do you see that this is a direction that can literally break the entire American government? Do you see that in 4 to 5 years from now, half of the government's budget simply is going to go into paying the interest payments? How are you going to sustain the Social Security? How are you going to sustain the Medicare? That's when investors will start losing hope and they will stop loaning money to the US government because they're afraid that if we're going to loan our money to the government right now, either we're going to demand much higher yields. We're talking about 8%, 9%, or maybe 10%, since it's much riskier to loan money to the US government, or you're simply not going to loan it and the US government will not be able to refinance its budget and will be forced to print much more money. Because if you don't print money and you default, that will be the end of the dollar. And to prevent that, you're going to print money. But if you print money, it's going to cause massive inflation, which again damages investors' confidence. So the question is that, how do you protect yourself? Well, there aren't many options to protect yourself because United States is literally the safe haven for investments. There isn't a single place in the world that is a better place to invest your money other than the United States. But if the government is doing one thing and it's literally just destroying the entire system, it doesn't mean that other companies are being destroyed as well. No matter how big the crisis was, the stock market, or the Nasdaq, as you can see in front of you, has been growing dramatically. Whether we had the pandemics, the 2008 financial crisis, the dot-com bubble, the crisis when the United States untied the dollar from the gold. So the only place to allocate your assets would be the stock market. But if you're investing in the stock market, you need the right skills, you need the right mindset, and you need the right tools in front of you. It's not about simply picking up stocks, but when you understand the logic behind it and you know how to find those great stocks, it doesn't matter what happens to the US government because you're taking care of yourself because your money is being invested in the right assets. And if you want the right tools in front of you, if you want to become such a great investor, then check out the first link in the description of this video. That's it for today. Stay safe. Thanks for watching, and I will see you in the next one.